August 15, 1971, President Richard Nixon made a historic announcement that forever changed the global monetary system. In his speech, Nixon declared that the United States would no longer convert dollars into gold at a fixed rate, effectively ending the gold standard that had been in place since the Bretton Woods Agreement of 1944. This decision, known as the Nixon Shock, had far-reaching implications that continue to shape the global economy today. One of the immediate effects of Nixon's decision was a period of uncertainty and volatility in the financial markets. Without the stability provided by the gold standard, the value of the dollar began to fluctuate wildly against other currencies. Central banks and investors scrambled to adapt to this new economic reality, leading to increased inflation and economic instability in many countries. In the years that followed, the Nixon shock had lasting effects on the global economy. By abandoning the gold standard, the United States was able to pursue expansionary monetary policies to stimulate economic growth. However, this also led to a significant increase in the national debt and inflation, which plagued the American economy throughout the 1970s. Furthermore, the end of the gold standard paved the way for the rise of the modern financial system, characterized by floating exchange rates and a greater reliance on fiat currencies. This system has enabled greater flexibility in monetary policy and trade, but has also created new challenges, such as currency speculation and financial crises. Nixon shock also had profound geopolitical implications. By breaking the link between the dollar and gold, the United States effectively relinquished its role as the anchor of the global monetary system. This shift in power created opportunities for other countries, such as China and the European Union, to assert themselves on the world stage and challenge America's economic dominance. In conclusion, Nixon's decision to take the dollar off the gold standard in 1971 had a profound impact on the global economy. While it led to increased economic growth in the short term, it also contributed to inflation, debt, and financial instability in the long run. The legacy of the Nixon shock continues to shape our modern financial system, highlighting the complex interplay between monetary policy, geopolitics, and economic stability. In conclusion, Nixon's decision to take the dollar off the gold standard in 1971 had a profound impact on the global economy. While it led to increased economic growth in the short term, it also contributed to inflation, debt, and financial instability in the long run. The legacy of the Nixon shock continues to shape our modern financial system. If you have several $1,000s in the bank, it might be wise to protect the value of your money from the decay of inflation. Take a look at acquiring some precious metals every month. The link in the description will take you to the source I use to acquire some silver every month. Sleep better knowing the value of your savings is safer.